Hey guys, so on this slide, I'm just gonna show you how to, how to approach your trading day, how to draw these rectangles, how to draw the boxes, the intra-week cycles, the intra-max cycles, and how to, put them with proper color codings. So we're just gonna get straight into it. We're just gonna open my charts after showing how to show you, after showing how to approach your trading, how to draw these things, and then we also get into how to exactly the first thing that you do, like the checklist of what to do first when you wake up, after when you open your trading platform. So without wasting time, let's just get into our charts. So I'm just gonna open this real quick. So this is a dollar USD exotics chart. So as you can see, there's nothing there. I'm gonna do the first thing, it's to upload my clean chart. By now I'm gonna assume that you all know how to put properly, or how to customize properly your market maker template. So I love the South African rand. It's my current currency, man. So I'm just gonna start with it, the South African rand clean chart. And remember, not only because it's my country currency, also because of within or between all these things, I prefer to trade the South African rand than the Mexican peso more than all these other ones. So stick to what you know best. So although they're consistent, but then look, I'm also looking at the spreads. And then this one is cheap. It's 14 pips. It also depends on what broker you're using. I use different brokers for different purposes. So without wasting time, let's just get straight into it. Okay, let me just do this. So first things first, I've just uploaded my market makers template. It's a very clean chart. I wanna draw the previous full week. So the previous week had only 4 days only 4 trading days. So I'm just gonna do that from this was the 31st and the 2nd. Yeah, we weren't really trading on the first. So let's just go to a calendar. Let me just do that. What's happening, Mr. Calendar? Okay. The preview started on Monday the 31st, the 2nd Tuesday. So it starts on the 31st. This was the 31st, it was Monday. And then until Friday the 4th. Yeah, so this is the whole previous week. So I'm just gonna change that color to red and remove the background. So there we go. We had the previous week, and then that other week also was 4 weeks because there was also Christmas. So Christmas is not a trading day. Christmas and New Year's Day, so they're both not trading days. That is why it's only 4 weeks. So just gonna do that. That is how I draw my boxes. And then how I do my shortcuts to copy and paste these things. To do this copy and paste, you just press and hold control and then drag it like that. Then you've just copied and pasted it. So you just do that. It makes your work very easy. It saves a lot of time. You need to know how to use properly your shortcuts. So I'm just gonna continue copying and pasting those cycles like that. The importance of having the cycles is so that you can see where the price is with relation to the market maker cycle, or like for instance, what day is it, and then what do you expect the price to be on that day. Like for me personally, if it's Tuesday, Wednesday, I'm expecting stop hunts. If it's Monday, I know what I'm accumulating. If it's Thursday, Friday, I'm expecting reversals. So if you know that, then you'll be able to take proper positions, knowing where, having the confidence to take a position because you know where the price is going, and also know where the price has been. So that is very important. So I'm just gonna go back like 2 months, November and December. There we go. As you can see, my boxes are red in color. This is my intra-week cycles. When you draw your intra-week cycles, just make sure you start from Monday. Just look at your dates. You see at the bottom there, this was the first. So you want to, when you go to the next month, this was the 1st of November, the 1st of November 2018, and this was the 2nd. So it cannot be. So which means I've been doing 4 days, which has been a mistake. So I'm just gonna start over. So let me just do that. just gonna start over. Let me just do the clean chart. Yeah, there we go. You just need to be focused. I'm thinking about a lot of things at the same time. I'm busy doing this, I'm thinking about something else because I want to talk about it, then I end up not paying attention. And you need to pay attention. It's very important. It's very, very, very important that you keep it, you know, you pay attention to what you're doing, because you're speaking money here and it's a lot of numbers. So if you make mistakes, then you're not gonna carry it, period. So those are the only 4 days that we need to have there, from the highest to the low prices of the week or the month. So my weekly cycles are red in color. So after that, I just want to extend this. So this was the 14th, and then there needs to be a 2 days difference. So 14, 15, 17, obviously this is Monday. You see how I see my dates. This was the 14th here. Look at it, look at the price here. Look at the price here. No, the date actually. This was the 14th, so it's Friday. The 17th, it's Monday. So I'm proper now, because there are no other, you know, major holidays. So I'm not concerned with, you know, skipping a day or having another week with 4 days. Those weeks with 4 days, we only find them in December and January most of the time, unless there's like a holiday in the US or whatsoever. But then most of the time, you know, the charts don't really close, unless certain instruments like stocks and then other commodities like gold, so they close on certain American holidays, so we're not able to trade them. So am I still on the yeah, I'm still on the right path. So let me just continue with that. Remember, from the highest to the lowest prices of the month, of the week actually, just like that. Just want to cover the whole November and December. And then it's simple. Once you get to, you know, understand, you're going to be very proficient. You're going to be able to do this, you know, without wasting any time. It might take some time before you actually grow into it, but then as time goes, when you practice and put in the work, you're going to get it. I promise you that. I was then as good, you know, when I started out with this, but then because I put in the work and I studied, I was able to even figure things by myself, that, you know, even people that I started with, they still tell me, you know, this market makers thing, it doesn't work. I'm like, dude, and I just laugh at them. I'm like, you know, it is, bro, it works you know, half of the time, but you know, and deep down I know, you know, what I'm doing and what I do. Everyone knows their work, you know, so you don't need to go around trying to convince people that you're good. Trading is for you. Trading is for you. If you get better with trading, you're doing it for yourself. You're not doing it for anyone. You're doing it for yourself. So this is my monthly cycle. If you've just seen, it's another red box which I've just expanded. Remember, November had 5 weeks. This was the 29th of October, the 30th, the 31st. So this was the 31st of October. So October has had 3 days into this week. So this is not November week, this is an October week. So we're just gonna do that. So this week I only had 2 days that belongs to November. So we have 3 days belonging to October, which means this week belongs to October. So our November week starts on the 5th, which is Monday, the first week of October, of November. And then it ends up on the 30th, because Monday is the 3rd, you understand? So this is how you properly put in your cycles. So I'm just going to copy and paste that as well. From the 1st of December, because this is the first week of January. It's December had only 4 weeks. So we're just going to do that as well. Put it there. From the low to the highest price of the month. So as you can see, this was accumulation. First week of the month, stop and Tuesday high, stop hand high, long sustained run. And then what Fibonacci was there? 68% Fibonacci, almost 23, almost 786, almost 786. But then it's 68.6, 618. Yeah, it's 61.8. So it is 61.8 there. What else do we have? We don't see much, but I just don't want us to go, go much, go back for like too much, backwards. So let's just look at from November until December. Accumulation, stop on second week, long sustained run show. So you should have been able to take a position here, right here on this day. Take a position here, stop on high, let it run. Look at this, people. This is super consistent. November should have been one of your most profitable months of the year. Look at this. This is how consistent the market maker cycle is. And you don't have to trade intra-week. You can trade intra-month, intra-week. I like trading the intra-month and the intra-week and the intra-month. You get in here, accumulation, stop hunt. Accumulation, stop hunt. Accumulation Monday, and then Tuesday, Wednesday, stop hunt. So let me just do this. Listen, guys, there is no indicator that helps me draw these things. I do them manually. You have to do them by your hand. So let me just change that color into red. Let me just put that here as well. That over there. I think they look very good. Let me just put this here as well, just to show you how this market maker cycle is consistent. So just gonna shade that inside part there to show that it's the accumulation phase, which is the Asian range of the week, hence the arrow. In my old flashcards I used to write arrow just to show that it's an Asian range. It's the Asian range of the week. That is the Asian range of the week right there. I can just also put that here. Yeah, I think it's good enough. Let me not go further. So as you can see, nice Tuesday stop and high, Tuesday stop and high, Tuesday, Wednesday stop and high on top of that moving average. So this is a very high probability setup. So what else do we have? Can we draw this like that? Yes, we can. So I would have killed that. Had I seen it, I wouldn't have played with it. This is how you anticipate, ladies and gentlemen. Before even price came here, you already know this is a high value area that you need to look at. My trend lines are always black in color, so I'm just gonna change that, and from that to there. So that area right there, because I've already outlined it like that. First touch, support, resistance. If it comes Tuesday, Wednesday, stop and there like that, I kill it. On top of that moving average, I kill it. I maximize on it heavily. Let's see if do we have support like Fibonacci from the previous high price of the week. What do we have there? We have 50 and almost 38. So this is a very high probability setup. So we have three confluences, technicals and market, three technical confluences, like this support there, breakout of the support and coming to retest. There's dynamic resistance, which is 200 moving average bounce. Look, and there's a cross bounce. It crossed 250 and 200. After crossing, it comes when retested 200. There's a cross bounce. And then what else do we have? It's a 50% to 38% Fibonacci retracement. And then what else do we have? In terms of, now we're gonna go into market maker. So we have Tuesday, Wednesday stop and high. So which is potentially the highest price of the week. So for me, that's a kill there. So I take it, I maximize on it heavily. I bag my 370 pips. I've got paid with standard lot. 370 per position is $3,700. 3,700 having open 5 positions is 3, 6, 9, 12, 15. Almost $20,000. 20,000 divided by. Let's not even go there. But it's good money. So here you're expecting a reversal. Thursday midweek reversal. You take it if you want a counter trend. But then, like as I said, I don't like counter trending, ladies and gentlemen. So this is how you approach your trading day. But then before you can get into anything, after having making your analysis like that, make sure you save the template. So I'm just gonna show you how to save that template, so that when you get to another pair, or maybe you want to move your analysis to another trading platform or another broker, you don't get to reanalyze the same thing again. No, you just move your analysis around. So I'm just gonna save that template. It's USDs. So just like that, I've saved my template. Even if I open another, let me just do that. Even if I open another ZAR template, another ZAR pair, I will just go to the ZAR template, just load it up, and then I'm good to go. Let me just delete that. You see, so that is how you should just go on about it. So 250 moving average crossover, 200 and 800 moving average crossover, comes back and retest the 800. There's a cross bounce. 15200 moving average crossover, it comes back to retest the 200. There's a cross bounce. Do you see how this is? It's very simple and straightforward. You see this, you take it, you kill it, you maximize on it. That's it. 13 and 50 moving average just goes up, it retests the 50. 15200 moving average crossover, it goes up, it retests the 200. 200 and 800 moving average crossover, it goes up and retests the 800. It's cross bounces, ladies and gentlemen. You can just trade off moving averages and still make good money. So that is how I approach my trading, how I do my analysis. And then I would just do the same thing. I come to USD, Turkish lira, start over again, load the clean chart, start looking at my date in the calendar, see if today it's Monday, so last week had 4 days. Just gonna do that again, start over, and then change that color into red and check the background. There we go, from the highest to the low prices of the week, copy and paste that again, and blah, same thing over and over and over. That is consistency. So I hope you understand all that, ladies and gentlemen. So in terms of how I approach my trading day, let's get into that. So let's just say it's in the morning, or it's in the morning, I just woke up and I wanna trade. So what I'm gonna do right now, before I do anything, because I've already did my anticipation, my biases over the weekend, so I know what my bias is. So in terms of that, let's continue with this pair. We see it's very bearish here, so we're just gonna want to look at our points of references. So we're just gonna look at those previous support, and then if it could potentially turn into new resistance area, so we're just gonna highlight that. And you see there's also an ATR there, so that's also a good area that we might also be interested in taking short positions. Let me just highlight that like that for you. Let me just move that to the side, and then just cross that over. There we go. So that is my first high probability area. My second one, I'm just gonna wheel my Fibonacci from the highest to where the price is currently. From that area, there is no significant Fibonacci ratio there, but then it doesn't matter where it goes. For me personally, I would love if it comes around that area there, I would be more than happy to kill it. So like as you can see here, there's another major support and resistance area. I'm looking at where price has broke below previously just now, because remember there's a trend line here. So it broke below this trend line. So I'm gonna look at this previous lows as my points of reference. So I'm just gonna do that. Okay. Just gonna do that. This is another second area that I'd be interested in selling from. I don't want to counter trend, ladies and gentlemen. If I'm gonna take this thing bullish, I'm gonna need to wait for another kind of major or reversal or conviction, or I don't know how to call it, but then I always trade in line with 10, and for now there's a very clear bearish trend, and then there's also major support on that area. So it's more than likely it might also come back and retest it as a resistance. So for me, that's my high value area. This is what I would love to see happening. Whether it comes from this low or here or wherever, even if it goes to this low, fact of the matter is that I'm not taking it long. I'm only interested in taking it short. So I'm just gonna do that. Change that into color green. It's going up. And then continuation of the downtrend. It's red in color. There we go. So, but as you can see, we might not get this tomorrow on stop and high. It might give us a stop and low tomorrow, stop and low Tuesday, Wednesday, stop and low, and then go up, but retrace Thursday, Friday. So regardless if it comes on Wednesday here or next week or whenever, I'm okay as long as it comes to that area. If it goes continues going down without me, it's okay because I'm not losing anything. But should it ever comes to these areas there, I'm thinking of taking short positions. You understand? I'm also gonna check out my Fibonacci, see if I don't have any there are no any significant patterns that I can talk about right now. But then throughout the week, it's gonna happen. You will see things forming up. You might actually get a nice continuation bearish pattern, bearish flag or pennant or whatsoever. You don't know that yet, but then for right now, this is a very good high probability sell for us. So we're just gonna copy another weekly cycle, copy and paste, drag that. No, I didn't want to drag. I wanted to copy and paste that. So there we go, and then we're just gonna put that like that. Put this like that. That is an area that we would love to enter, taking it short. Right there. So if ever we enter here, let's see, this is 50 pip, this is gonna be a 50 pips, we're gonna risk 50 pips, and then if ever it continues down, we're gonna take the previous support as our new target. So this area here, this is an area that we're gonna look into taking profits or partial profits. Just gonna change that into gray because I'm undecided whether I'm gonna take it long there or I'm gonna wait for a break below and then come in to retest again and continue taking it short. Remember guys, we train traders. And then do you see how much you still have a lot of potential of going short? So it might give us this retest, break below, come back and retest. And look at it this way again. This was the 4th week of the month, so this was our last this was the reversal of the previous month. So this is our anchor point. This could be level 1, level 1 safety trade, or this could be our anchor point level 1, level 1 safety trade, then continuation of the trend, because there was also a harmonic pattern here. There's X, A, B, C, D. You see, let's go to 30 minutes. There you go, it's X, A, B, C, D. So I think this could be a bet because it wasn't invalidated, guys. It's 50%, doesn't touch 618, so it's a bet from 50% to 886. You see, so that is a very good bet. And then from then it broke below, took out that low, and then now we expect price to retrace that previous high, the previous support as resistance, or this one here. And we're also going to look at our moving averages. If price comes back and then gets 200 or 800, you see how we get 15200, and we didn't get the bounce from 200. So, and then we also get 200 and 800. So I'm looking for 200 or 800 bounce here. So if I get a 200 bounce on Thursday, I take it. If I get an 800 bounce on Friday, I take it. And as long as it's in line with the downtrend, you understand? So that's it. And then so risk, you're gonna risk about 50 to 70 pips, and then the reward is gonna be 500 pips. So that's a very good risk reward. You risk 50 for 500. 500 divided by 50, it's like 2, 4, 6, 8, 10. 1 to 10 risk reward. Imagine, that's very, even if you lose 5 of this trade, it's okay, but one winning position is gonna give you more, and it's gonna give you profit as well. So you do that, and then after you do this, you start to look at your economic calendar, because right now you know where your bias is. You look at your economic calendar. This is what you do. You go to your economic calendar, and then okay, let me just do this. Okay, let me just go back to. Okay, I'm just gonna do this real quick. Just gonna do this and that. So like as we can see, I have two different economic calendars. I have my FX book, and I also have Forex Facts. The reason being, you don't get the same thing, like the same things. They're not very precise, these economic calendars. That's one thing I've noticed. There's this other lady in my group that helped me identify this. So right now I use both of them. As you can see here, we have high impact news or in 1 hour 8 minutes on the Canadian dollar. So you want to look at your Canadian dollar, you want to analyze your Canadian dollar index and see how you can profit from this high impact economic news or announcements on the Canadian dollar. So tomorrow, do we have anything on South African rand or the US dollar? No, nothing, but we do have something today. And then tomorrow, FOMC or later, I wanna sell the USD later during the week, not tomorrow. So between anything anywhere between Wednesday, Thursday, and Friday, that's where I would like to sell it. So I'm just gonna look at South African rand and the USD on between Wednesday. Do you have anything on the? We have something. We have Bank of Canada interest rate decision here on Wednesday around 5 o'clock in the afternoon. So on this day, you're going to be trading the Canadian dollar. We will have done our analysis, and then we know how the Canadian dollar is supposed to react. We just wait for that precise time and you look at how we don't want to enter with retail traders on they say no, we don't do that. We wait for a proper entry. We have our pending orders there. If price comes to a levels, we get filled in, then we're good. So as you can see, on Wednesday we only have the USD about later in the evening, okay, but we do have something on Canada. So this week I think the Canadian dollar, it's one currency that we should look at, being the second week of January 2019. So tomorrow we have trade balance. I don't really trade this. I don't trade fundamentals. I just look for volatility. The reason I look at fundamentals is because I want volatility. I'm only interested in trading currencies that I know are likely to be volatile. You understand? And I'm not gonna wait 5 hours for a setup that I'm not. No. I wait for that particular time. What time is this? It's 5 o'clock in the afternoon. So I'm gonna wait for that precise time. When the news kicks in, and then it's at that, when the news kicks in, and then it comes to that with a pin or spike to that high value area, I kill it. It's gonna find my pending orders there, and then automatically they're gonna get filled in. So I know right now Wednesday, between today and Wednesday, I'll be looking at the Canadian dollar. Let's look at more. Thursday, what do we have? We have news sales. No, I don't know this. I don't like the news that I'm not popular. I only trade things that are popular. When I hear retail traders about something, hey, there's what, then I pay attention. FOMC, I hear a lot of them like talking about MC. I will be analyze for FOMC and I put my pending orders there, because I know I don't trade news. I just look for volatility within the news. So on Friday we have a lot of exactly. You see, around New York Open Friday, you have consumer price index and it's high impact news. On Friday, this is an area where I'll be looking to counter trend. You see, because we have something on the dollar here on Friday, and then it's high impact. So like as I was saying, this setup here, I'll be interested in taking this setup if it comes later in the during the week. So I'm just gonna let it be. It could range for like today, tomorrow, give us a shallow stop hunt and continue ranging, accumulating further positions. When market makers, after they've accumulated those positions, they'll come back on Thursday, Friday, give us that nice retest on that support and resistance, or maybe even give us let me see, that 38.2 Fibonacci retracement. Maybe they could also give us that. They could come and retest that, because you can see it's clearly gonna be around those moving averages there. Those moving averages gonna be around that area. So it might come to those. We don't know, but if it gives us that, we're gonna be ready for that. And then you're gonna kill it. You understand? So that's how you approach your trading day. That's how you incorporate fundamentals in your trading. You look at your economic calendar, you analyze your markets, you draw your cycles, and then you go to Light Forex, you check out the index chart, you look at how where price is more likely to go across the board. You don't look at GBP USD or USD ZAR or Euro USD. You look at how everything is behaving across the board. Like as I said, you look at USD index, you know how the dollar is behaving. You look at the euro index, you look at the pound index, and so forth. So with regards to that, I hope, ladies and gentlemen, that is very clear and precise. And then I hope you're gonna be very able, to draw these things by yourself, and then identify, outline major support, loan green, and resistance. Support is only green because it's going up, green it's going up, pink it's going down. So you measure price properly, look for 38%, 618 and 50% Fibonacci retracements, and then 127, 141 and 17 for possible exits. And then look for price congestions so that you can identify where market makers are accumulating for retail traders to take positions so that they can stop them out. You understand? So that is how you are able to anticipate stop hunts. You look at accumulating where price is moving in range, where it's accumulating, moving in range. That's where market makers are likely to issue a stop hunt, and then that's an area where you should look out for, where retail traders, because we understand the retail trader psychology, we know where they put their stop losses. So if you are able to identify an area where retail traders put stop losses, then that's an area where you want to put your pending orders, whether you're going north or south. So I hope that makes sense, ladies and gentlemen. So with this video, I hope you're gonna be very clear and precise and know how to draw and analyze and anticipate, make your how to go on, how to approach your trading day, what you do first, how to draw and everything basically. So with that, thank you guys.